5 major risks that could shake the global economy in 2026. The global economy is becoming an increasingly complex system. Supply chains stretch across continents. Financial markets react within seconds. Energy, technology, and capital all move within a single global network. That's why a crisis today does not affect just one country. A shock in one region can spread across the world in a very short time. We saw this in 2008 when the financial system collapsed. We saw it again in 2020 when the pandemic began. And now, in 2026, the global economy is facing new risks. Some are visible, others have not yet surfaced. But within the financial system, they are slowly growing. Welcome to Finance Historian, stories behind money, markets, and empires. To support the channel, you can subscribe, like the videos, leave a comment, and share them. Thank you. The most dangerous crises for markets are not the ones that appear suddenly. They are the ones that grow slowly, quietly, without attracting attention. Until one day, everyone asks the same question: how did this happen? Here are 5 major risks that could shake the global economy in 2026. The rapid rise of global debt, growing geopolitical tensions, fragility in energy markets, artificial intelligence transforming the labor market, and potential new bubbles in financial markets. Each of these risks could create a major economic shock on its own. But the real danger is when these risks appear at the same time, because the global economy is now a far more interconnected system. And sometimes, the crises that shake the world begin exactly like this. 1. The global debt web, the largest financial burden in history. There's a massive weight on the global economy: debt, not only government debt, corporate debt, bank debt, household debt. According to international financial institutions, global debt has exceeded $300 trillion. That number is larger than the total output of the global economy. So why does this matter? Because for the debt system to function, 2 things are required: growth and low interest rates. But today, the global economy is moving away from both. Inflation has risen in recent years. Central banks increased interest rates. Financing costs have gone up. This creates a serious risk for heavily indebted economies, especially emerging markets, which depend heavily on dollar-denominated debt. When their currencies lose value, the debt burden becomes even heavier. For some economies, the situation could turn into a debt crisis. The Argentina crisis in 2001, the European debt crisis in 2010. Similar scenarios could return. And debt crises have one common characteristic: they usually do not begin in just one country. They create a domino effect. One country defaults, investor confidence collapses, capital flows out, and the crisis spreads. This global debt mountain is therefore one of the biggest threats to the financial system. But the risk is not limited to government debt. Private sector debt has also grown rapidly, especially over the past decade. Low interest rates encourage companies to borrow more. Cheap credit, cheap financing, and rapidly expanding balance sheet risks. Many companies financed investments with debt. But when interest rates rise, this model becomes fragile. Rolling over debt becomes difficult, borrowing costs increase, and for some companies, cash flow problems begin. This can also create risks for the banking system, because a large portion of corporate debt is financed by banks. If major companies struggle to repay, banks can come under pressure, and this is often how financial crises begin. First debt, then loss of confidence, then liquidity stress, and finally, a break in the financial system. That is why global debt levels are considered by economists to be one of the greatest risks for the coming years, because the debt system relies on growth. But when growth slows, this enormous financial structure becomes much more fragile. 2. The US-China technology war. The greatest competition of the 21st century is no longer about oil or energy. It is about technology, artificial intelligence, semiconductor production, data. In these fields, 2 countries dominate: the United States and China. In recent years, a growing technology rivalry has emerged between them, especially in semiconductors, or chips, which sit at the center of this competition. The modern economy cannot function without chips: phones, computers, cars, satellites, defense systems. Everything depends on them. This is why chip production has become a strategic industry. The United States is trying to limit China's access to advanced technologies, export controls, restrictions on semiconductor equipment. Meanwhile, China is trying to build its own technology ecosystem. But this rivalry may not remain limited to technology. Supply chains could split, trade blocs could form. The global economy could divide into 2 technological systems: a Western ecosystem and a China-centered ecosystem. Such a shift could slow global trade, increase production costs, and create massive uncertainty in the technology sector. 3. Energy geopolitics. The oil and gas shock energy is the foundation of the global economy. Industry, transportation, agriculture, logistics all depend on energy. And energy markets are extremely sensitive to geopolitics, a war, a sanctions regime, a maritime crisis, and prices can move rapidly. A large portion of global oil trade passes through narrow choke points, sea routes, straits, strategic energy corridors. Any tension in these regions can trigger a shock in energy markets. When oil prices rise, it is not just gasoline that becomes expensive. Everything becomes more expensive. Transport costs increase, food prices rise, industrial production becomes more costly, and the most critical consequence is inflation. When energy prices surge, central banks face a difficult choice: raise interest rates or support economic growth. That is why energy crises are not limited to the energy sector. They influence monetary policy itself. 4. The artificial intelligence revolution and the labor shock. The fastest growing technology of recent years is artificial intelligence. New generation AI systems can perform not only simple tasks, but complex ones as well. They can write code, create designs, analyze data. This creates enormous opportunity, but it also carries a major risk, because technological revolutions always transform labor markets. During the Industrial Revolution, millions of jobs disappeared, but new industries emerged. Now a similar transformation may occur with AI. Some professions could quickly become automated. Especially white-collar jobs may face risks: accounting, analysis, some areas of software development, customer service. If this transformation happens too quickly, it could create a shock in the labor market. Unemployment may rise, income inequality could increase, and the economic system may search for a new balance. Technological revolutions have always created growth, but the transition periods have often been painful. 5. The silent bubble in financial markets. Some crises arrive loudly, others grow quietly. In financial markets today, some analysts believe a new bubble may be forming, especially in technology stocks, artificial intelligence companies, venture capital investments. Big expectations create big valuations. Sometimes in markets, stories create prices, not actual profits, expectations. But when expectations grow too large, a bubble forms. History is full of examples. In 2000, the internet company bubble burst. In 2008, the housing market collapsed. Today, some investors believe there may be similar overvaluation risks in the AI and technology sectors. If such a bubble bursts, its impact will not remain limited to technology companies. Stock markets could fall, investment funds could suffer losses, risk appetite would decline, and financial markets could enter a prolonged correction. Why are global risks increasing? There are several reasons why risks are rising in today's world. First, the global economy is far more interconnected. A crisis in one country spreads rapidly to others. Second, geopolitical competition is intensifying. Tensions among major powers directly affect the economy. Third, technological transformation is accelerating. New technologies are reshaping economic balances. When these three forces combine, the global economy becomes more fragile. Conclusion: 2026 could be a critical period. The global economy is full of opportunities, but also full of risks: global debt, technology rivalry, energy geopolitics, the AI revolution, financial bubbles. Each of these risks could be significant on its own, but when they occur together, their impact multiplies. In economics, sometimes a single spark is enough: a banking crisis, an energy shock, a technology conflict. And markets can change rapidly. That is why, for investors, companies, and governments, the most critical issue today is no longer just growth. It is risk management. Because in 2026, the biggest question facing the global economy may be this: is a new global crisis coming, or will the world economy manage to navigate these risks? The answer will be revealed over the next few years. But one thing is certain: the global economy is more sensitive than ever, and sometimes a small fracture can be the beginning of a major economic storm. If you enjoyed the video, don't forget to subscribe to the channel, like the video, leave a comment, and share it. You can turn on the notification bell to stay updated on new videos. See you in the next video.